All right, let's talk financing today. I'd say about half of our projects are paid by check or cash, or one of the variances of that. And then I'd say of the remainder, 2/3 are financed. I'll talk about that in a second. The other third is a credit card. We take all major credit cards. We don't charge a fee for that ever. The financing projects, there's a bunch of different ways that happens. We offer about 5 different options in-house. When we say in-house financing, it's not us offering the money. We have a much bigger company that we work with that does that, 2 of them actually. And between the 2 companies, we have options for 5 years, 7 years, 10 years, 12 years with very low interest rates. So it's a personal loan, so they don't lend it against the house, they lend it against you individually. And of course, depending on your credit and all those things will vary the interest rate, but it's very low, mainly because of our volume buying power with that company. We get very low interest rates that we obviously pass on to you. We don't take any money off of that. The 5th one is a same as cash option, and that's actually the most popular, believe it or not. Mainly what it does is it allows you for 12 months to just not deal with it. So a roof, it seems like the majority of the time is not something that we planned for. It was, I had a leak, I had another leak, let's just get the whole thing done. Well, hopefully we can make it a little more exciting than that by turning it into a really nice, aesthetically pleasing part of the house. But if the money's not there just now, or some of it, we can actually get the money from the company. They give you a loan, but they don't charge you any interest, they don't collect any payments, they don't basically want any money from you at all until 12 months after the completion of that project. After that, though, the big hidden asterisk is it turns into a really expensive loan, 17% or something crazy like that. So I always tell everybody, please pay it off after, or deal with it, refinance, do something else at the end of that 12 months. But the point is that gives you that 12 months to file your taxes and get a refund, refinance the house, whatever happens to be, to get that money back. The other option that some people do that they don't do with us, you don't need us for it, but is a refinance on the home. You can do a cash out refinance, you can do a second mortgage, you can do a home equity line of credit, which is just taking the difference that you have in equity and borrowing against that for the project. All of those are fine too. They take the value out of the house to pay for the project. The beauty of a roofing project in 2018 was the last report we have from Remodeling Magazine. They talk about different house projects, the average cost and then the resale cost. And I don't have it in front of me, but if I remember right, the resale value was 111% of the cost to replace the roof. So that's nice. So you put that money out toward the roof and then you actually get it back in the form of equity. So an equity loan might be viable too. Typically they have lower rates than a personal loan like what we would offer. Long story short, whether you're paying with check, cash, credit card, or you need some financing options, we can help you with all of those.